Thanks guys for the commentary, especially on the cash-based revenue. First question is, you guys have very good momentum in new member additions. I think it was like 1.1 million, which was a record this quarter. What channels are you getting these from? And are there any changing characteristics of the new members now relative to, say, a couple years ago?
The characteristics of our member acquisition are in line with where they've been historically. Each business has an individual marketing plan. The lending business has historically been one that relies on legacy channels such as direct mail, but it is heavily influenced by affiliate partnerships. Our SoFi Money product is a broad-based digital strategy. Our brokerage business continues to benefit from broader selection in IPOs, alternative assets, private offerings. Crypto is the new kid on the street, and we're developing new opportunities for marketing there. Our credit card business is actually doing pretty well. The last product that I'll mention is SoFi Plus. We relaunched it on April 1st. It's doing phenomenally well. It's $10 a month with more than $1,000 of value. 50% of the people that sign up for SoFi Plus take out another product. So, not only does it drive the direct revenue stream, it is driving additional cross-buy.
Hey, good morning. I wanted to dive a little more into the tech platform. I know you guys have several partnerships and product wins from last year that should be going live as the year unfolds. Just want to see how the year should unfold and what the different puts and takes are to get you guys there from the 1Q run rate.
Chris gave you a specific guide for the year on revenue. Clearly, the business revenue was negatively impacted by the loss of one large customer. The tech platform revenue, if you do like-for-like on a year-over-year basis, was up about 12% year-over-year. We expect that year-over-year growth rate to accelerate throughout the year, both from our existing members' growth as well as new partner adds. We mentioned we have 13 new partners that have launched in Q1 2026. We also have one partner in the quarter that had an existing installed base, and so that's contributing. One of the things that may be hard for people to understand is a significant benefit that we have from owning the technology platform on our own innovation. We made the decision last year to build out crypto buy, sell, and hold. Those products will start to generate revenue in 2026 that'll be incremental. Our objective is to get back to 20 to 25% compounding growth over the years to come.
Good morning. Thanks for the question. Anthony, I'm just curious how you're thinking about where we are in the credit cycle generally. Obviously, credit performance was pretty good this quarter. I guess there's some underlying data that's pointing to things could get a little bit more challenging later this year given geopolitical macro stress. Just curious on how you're planning business around some of these perceptions. Thank you.
Credit performance has been strong as we reported. We have an early warning dashboard that looks across a number of macro and microeconomic factors and the performance of our own loans as well. If that turns yellow and then red, we reduce the tiers that we're willing to underwrite. We're not in that situation in any way, shape, or form. The current loans are performing well. The macro is also continuing to perform well. And we're also seeing strong demand from loan platform business buyers. You have the combination of strong demand from consumers plus strong performance and credit and adequate capital. It would be nuts not to be able to meet that demand and hold some of it on our balance sheet and continue to generate increasing net interest income. We had $690 million of cash net interest income, and we want to continue to grow that. It's a great baseline of revenue that allows us to invest aggressively.
Hi, good morning. Home lending is obviously a large market. You've had some growth there. Would you consider doing anything on the acquisition side, sort of building on what you've done in the past? And if not here, where would you look for potential acquisitions?
The M&A market is very vibrant. We're remaining disciplined and looking for things that can help us accelerate strategically. We feel like we've done the right acquisitions in home loans, that's not an area that we're currently focused on. It's really driving organic growth. As it relates to M&A more broadly, I would say we're prioritizing things tied specifically to SoFi Technology Solutions, the technology platform business. We've talked about the fact that we'd like to have revolving credit processing as well as a core tied to that. On July 1st, we will launch SoFi Bank on a new modern core as well as ledger. So the areas that we would probably prioritize from an M&A standpoint are really in the technology space, specifically revolving credit as well as crypto and blockchain services. We want to build out infrastructure services in crypto like staking as a service, stablecoins as a service, etc.